Hello traders, Damien here. We're going to be talking about bar by bar analysis. I apologize up front for the my computer's CPU fan is getting louder and louder. I'm going to have to replace it. I'll probably do that sometime over the weekend. But for right now, fortunately, you're going to have to bear with the noise if it comes up in the audio. So bar by bar, what's the significance of bar by bar analysis, and how can we incorporate that into what we've already learned? Well, a bar by bar gives us an expectation on the next candle. It helps us compare and contrast the current candle to the previous candle and have an expectation for the next one to follow. Where this becomes critically important is in those areas where we're looking for trade entry, because it helps us time our trade at the best place possible when we get that nice switching of the guard between the buying and the selling, or the selling and the buying, depending on which way you're looking to trade. So we're going to start again with the benefit of hindsight, with the benefit of the information, and then we're going to scroll back to a random place in time and see how this plays out moving forward. Okay, there's a couple of things I want you guys to first wrap your heads around, and let's create a imaginary candle here. Okay, and let's pretend that this candle is a bullish candle and that it opened here and that it closed here. This example would be the same for the bearish candle, only of course it would have opened here and it would have closed here. But let's say this candle's overall trading volume for this candle, this is the high and this is the low. It opened here and it closed there, meaning that there was no rejection whatsoever. It opened and never traded below its open, and it closed 100% at its highest point. This will signify a very strong candle. Now, how is it that we can interpret, okay, the strength and weakness of each candle to help us form an opinion or have an expectation as to what is happening with price? Okay, so let's first assume that this candle, whether it's a 233 tick candle, whether it's a 5-minute candle, 15-minute candle, whatever it is, the candle, okay, is a battle between buying, the bulls and the bears. Okay, this battle goes on every single candle, 24 hours a day, until the market's open, or while the market's open. Okay, these battles are important because it helps us with our assessment of strength and weakness. Okay, and it is important for us to have that from a bar by bar perspective, because it helps us understand where that weakness or that selling pressure or the buying pressure is starting to come into the market, so we can start looking for the structure area that's relevant to that to the trading opportunity and to put us into that trade. So we're going to look at all these examples in greater detail, but let's look at this candle and break it down into thirds. Okay, now it's not going to be 100% perfect thirds, but you'll get the idea. Okay, and I say thirds because we look at strength and weakness in the order flow by 3 parameters: momentum, projection, and depth. Okay, so here we kind of do the same thing. Momentum is how we assess volume. When I say look at the volume in these candles, that's momentum. The volume is the overall appearance of this candle, the height that it achieved. This candle right here obviously had much greater volume or momentum than this previous candle. Okay, therefore this candle had a lot more strength. Okay, there was more power to this candle. The bears were stronger in this candle. Okay, so that's what I mean by volume. Volume means, did the candle achieve greater volume than the previous candle or than the last few candles? If the answer is yes, then obviously the market is strengthening, or that driving force is strengthening. Okay, so if this candle overall holds 50% of its volume, okay, that is like the pivot point in the Fibonacci swing, 50%. Okay, anything below this, you have a tendency to be more on the bearish side of things. If you're above the pivot of this candle, then you're in the bullish side of this candle. Okay, how far the candle rejects or retraces back, because the candle retraces back from its highest point, okay, that tells you how much selling pressure there is. So let's pretend that there is a wick here, and this candle pulls back to about here. Okay, so we see that there's some small selling pressure that entered the market, pushed back the buyers, okay, but it stayed above its 50% and it's in the upper 2/3. That's a relatively strong candle. Okay, you could also see how much significantly weaker it is if this candle still closes bullish, but 2/3 of its overall volume got rejected, got pushed back. That's a much stronger selling pressure. Okay, and therefore this candle is weaker. Okay, so now we can begin to form an opinion as to how this compare and contrasts to the previous candle, and form an expectation as to what kind of candle we should get next. And if we do get the candle, great. Is the candle stronger or weaker than the previous one? If it's stronger, then we would expect what? Another one just like it. If it's weaker, then our opinion starts to change as far as our expectation in that the move in this particular direction, whether it's a correction or whether it's a extension, okay, is weakening. And the more rejection we start to see, the more selling pressure we start to see, okay, and then we'll have a transition between the buying and the selling, and that is our critical point that we would like to see in our area of interest, whether it's a supply and demand zone, a correction, or wherever you're looking for a trading opportunity. That is the balance of power that we would like to see, and I'm going to show you exactly what that looks like in the examples here with the benefit of hindsight, and then we're going to go back into the history, into a random place, and we're going to apply this exercise. Now this exercise takes a little bit of practice, kind of like the order flow. It's not as simple as the supply and demand and the structure analysis, because it requires a little bit of strength assessment, excuse me, and it also asks you to compare and contrast that to the previous candle and have an expectation on the next candle. Why is the next candle expectation important? Well, it helps you understand what kind of candle you should get next, so if you don't get it, you can apply to what does this mean question to the overall scenario and see if it's a particular area of interest to enter a trade, or if you're trading, if you need to do something when you have a rotation in price so that you can manage your trade more effectively. Okay, now just because you get a candle that wasn't expected doesn't mean you need to change everything, doesn't mean you need to expect that the market is reversing or anything. Okay, you have to assess the strength and weakness of the candle, understand where you're at and what you're likely to see in that general area. What I mean by that, if you're in an area of short-term structure or longer-term structure, you expect to see what? Some candle rotation, some candle weakness. Why? Because price is interacting with some barriers. So you're going to see weakness, you're going to see rotations in price, but you have to ask yourself, what is my expectation? Is my expectation for price to get past this from a structure analysis and from an order flow analysis? Okay, so then this correction may be meaningless and I expect there's something shallow and it's insignificant to my trade and to my trade management. Okay, we're going to start putting all these pieces together here in this video, and probably another one depending on how long this one's taking. We may break it down in two to give you some chances to process this in a way that's better for learning. So now that we have that out of the way, I'm going to erase this, and this. We're going to make these candles fatter. Okay, and let's start here, and we see that we have a candle that's 100% of its overall volume, very strong. We're not going to compare it to this one yet. We're going to do that further up here. And we get another candle that opens at some point, tries to trade lower, okay, gets rejected, pushes up, has great volume, great momentum, okay. The candle closes near its highest point, very little rejection. So when you compare this candle and this candle, it is obvious what kind of candle you should get next, right? A bullish candle, preferably, possibly a stronger candle, right? And we do get that. We get a candle that does what? it tries even less, tries to trade lower than its open, a lot less than this one did. Okay, it moves first, greater volume overall, holds 100% of its volume, right? What would you expect next? Another bull candle, right? So now you get another bull candle, but what happens here? When you start looking at this, you're expecting a strong candle here, something like this or like this, and you get something like this. What does that mean? Some weakness is starting to come into the market. Because after all this strength, we should have what? A fairly decent strength, okay? We get a candle that initially tries to trade lower, or at some point, it's not able to achieve much penetration to the downside, which is good. And then we get a candle that trades very little to the upside here. It's a very small candle. Does that mean that we're going to rotate here? Does that mean that we're going to get a bearish candle? No, it just means that we have what? Some weakness somewhere in this area. And then we don't know what the structure is in this area. It doesn't really matter at this point. Okay, but the next candle comes in, gaps higher. Okay, bullish sign. Okay, gaps higher. Okay, at some point tries to trade higher. Does not come down. It gets rejection. The bears come in. Okay, are able to hold 100% of its overall volume. What does this mean? It's an invitation to sell. It's an invitation to correct. Okay, had you been looking at this from an entry standpoint, this is not an entry you would want to consider, because why? You have structure right here, you have structure right here, not enough room. And what's your expectation? A correction to about somewhere in this area. Is it worth the risk? What are you risking? I don't know. Where would you have to put your stop up here? But is it worth the risk? Okay, the answer no. This is an invitation, or you're starting to see some of that what? Selling pressure, selling interest coming into the market. And here we have another candle, closes here, opens right next to it, at some point tries to trade lower, is not able to, comes up, moves all the way up here, and what? A little less than half of its candle holds, which means that almost 2/3 of its candle got rejected. What does that mean? Weakness, bullish weakness. Okay, what is our expectation when we compare this to this? That we should have somewhat of a range candle, which means somewhere within the bodies of this highs and these lows, because they're small. No side really made any progress, so we would expect something along those lines moving forward. And the market does not allow for that. The market produces a really strong bullish candle, momentum increase into a new high here, and then we have very little rejection. The candle never tries to trade below its open. Okay, so that signifies what? That there's still buyers here. There's still a lot of buyers here. What would we expect? Okay, we would expect what? Another strong like candle. Okay, and then we start not to see that. We start seeing some of that selling pressure comes in. So what does this candle tell you? It was a Hail Mary pass like we sometimes see in that last push to try to make a new structure high. Okay, that happens all over the place. Now, I'm not going to go through every single one of these candles because it would take forever, but I do want to show you what rotation looks like. Okay, and we see that price comes up here. Okay, we see a lot of rejection, we see a lot of selling interest, sellers achieve, still some buyers around because they got pushed back, right? The buyers come in, we see a lot of intra-range candles. They're stuck within the range of each other's, which means what? It's a balanced market. They're fighting it out. They're trying to figure out what's what. Okay, and then we have another candle here that tries to push higher, is unable to, closes here, closes down, and then we have another candle that opens here, barely tries to trade above its open, not like this one, okay, and then comes down and closes in its bottom 2/3, okay, and makes, if you will, from these little candles here, from this little situation, a new structure low, which none of these candles achieve, right? None of these candles achieve the new structure low until this one. That is rotation, that is decision, okay, and that is the place where you want to consider for an entry, as the balance of power has shifted from attempting to buy to not being able to buy to I want to sell. Okay, that is rotation, that is important, and now we're going to start going through this exercise in real time, not in real time, but in the history without the benefit of hindsight, and we're going to go over this exercise. I'm going to show you the power of being able to, with a very high degree of accuracy, anticipate swing highs and swing lows just by bar analysis. And then we're going to start tying all of the structure, order flow, and supply and demand zones and bar by bar into a pretty much complete methodology at this point. Okay, so let's take it here and let's go back somewhere where we don't have. Okay, so I'm not going to go over right now the structure and the order flow. I just want to look at the bar by bar. Okay, and I see that, oh, and we're also going to look at a little bit of structure because it's important. Okay, so now we have here, we have price came up, unable to climb higher. We see that we had rotation was here, interest was here, and we have rotation here. Now we expect price to continue going down. We saw the bulls tried to come in here, and then the next candle tried to trade higher. There was still what? Selling pressure. Candle closed 100% on its lowest point. Our expectation between this candle and this candle is what? For another bearish candle. We see that there's still some buying interest at this level, which you would expect to see as price what? The buyers came in and were able to take price higher at this level. So at this stage here, we just see some of that buying pressure, but they're not strong enough. And we see that the market came here. This candle closed lower than the previous candles, is very weak. We would expect what? A weak candle, but a bearish candle moving forward. This candle is a little stronger than the previous, as it is not able to trade higher than it's open. Still holds 50% of its volume. There's still some weakness here. There's still some buyers trying to get into this market, but our expectation between this candle and this candle, the next candle is what? Bearish candle. Okay, so now we get that bearish candle. Not much different, still some weakness, but the bears hold on to 50% of this candle. Still close near or past the low of the previous candle. That tells me that we're still strong enough to what? To expect another bear candle, especially when we never try to trade very much above its open. So now we would expect this candle to continue to push forward. And now we have a very strong candle that goes against a bar by bar expectation, that barely tries to trade lower than its open. Okay, achieves rotation and decision to the upside, holds 100% of its volume. Okay, this candle should not have been allowed from a bar by bar perspective. So does that add strength to this candle? Yes. Is this a candle that if you were looking to get long anywhere in this area, you would take this signal, especially since there's enough buying and price being able to withhold this area to take price higher? Okay, yes, this is a very good candle from a bar by bar perspective. It shows not only invitation but decision to come into the market and expect price to climb from here. So my expectation comparing this to this is for the next candle to be what? Bullish. Okay, and we do get a candle that tries to fulfill that expectation. Okay, we see that it never tries to trade lower than it's open. Okay, moves up very nicely. Okay, pretty much the same volume as the previous one, but gets completely pushed back by the bears and closes neutral. Some people will call this a doji. Okay, to me it's called an indecision candle. No side could take ownership of that candle. Both sides struggled, both sides closed right where it opened. That's indecision. What does that mean when you compare it to the previous candle? Now we're still bullish, but we have what? Weakness. This opens up the opportunity for the bears to be able to come in here. Although we expect a weak bullish candle to come next, we cannot rule out the possibility that what? That the bears may come in here. Okay? And we see what we expected. The bears tried to come in, they were not able to. The bulls came up here, closed down, a little bit past the 50% mark of the overall volume of the high and low. Now our weakness is turning into a little bit of a stronger bullish signal, right? So we should expect, when we compare all these three candles to each other, we would expect that the next candle be what? Bullish. Okay, and that does not happen. This is a significant signal for price to continue going lower, because what we expected not only did not happen, we did not get any price moving higher. we got a 100% very strong volume-based candle or momentum-based candle to the downside that closed near 100% of its low in an area where strong buying strength have been able to take price higher. This is a very strong signal that price is going to go lower, and I'd be very, very surprised if the next candle is at all bullish. Okay, and the candle tries to get bullish a little bit. It's not able to. Very small volume-based candle. Okay, what you would expect. This price is still trying to find support in this area, but our expectation is this candle closed at 100% of its low, which much less volume, but no rejection. 100% of its close. Okay, you would expect that the next candle would achieve another bearish candle. Okay, and now I'm gonna forward this a little bit to save time. We're already 20 minutes into the video. I'm just going to go candle by candle. You already get the general idea of how to assess the strength and weakness of the candles, and I'm just going to go candle by candle and call them out just based on how I see this and tell you where price is likely to start correcting or not. My expectation is for the candles to continue staying bearish. My expectation here, although we're seeing some buying interest, is for the next candle to be bearish. So we do get a bearish candle, but we see that we have a, sorry, just putting my phone on mute here, and we have a indecision candle, which means weakness. We would expect a mid-range or intra-range between this candle, something small that says I'm still bearish. Okay, that's exactly what we get. Okay, and now our weakness turns into a little bit of more selling strength, and we would expect the next candle to be what? Bearish. Okay, we still see some of that weakness falling into the market, but we still see some of that buying interest coming in, then pushing back the bears. We probably shouldn't get too much more movement out of the bears here, and we may start to seeing somewhere in the next candle or two some of the bulls to be able to get into this market and hold on to the candle. Okay, that may change now with this candle. This candle increased strength, increased volume, no rejection. I would expect a bear candle to come next, and now we see that the bulls are trying to do what I expected them to do in the next couple of candles to be able to come in and hold on to this. So now we have an invitation to buy. We have a possible area of correction emerging here, and this is the area where the bulls have an opportunity to capitalize on that and take price higher. I still expect a weak bearish candle or a candle that's mid-range, somewhere between the bodies of this, but I cannot rule out the possibility of the bulls being able to produce another candle here and try to make a more active take a more active position trying to correct here. Okay, exactly what I said. Intra-range body here. We see that the bulls came in, tried to correct in this area. We identified this area here as a possible corrective point. Okay, now we see that the bulls were able to get in here, no rejection whatsoever. This candle held a little less than half of its overall strength. We're not quite strong on the bullish side. There was still some selling pressure here. Nonetheless, this market is trying to correct, and we would expect from comparing this candle to this candle will be a weak bullish candle. Okay, so we don't really get a weak bullish candle, we get a weak bearish candle. But when you look at how the bullishness or bearishness of this candle, it opened here, it tried to trade lower, it did get pushed back. Okay, at some point it traded higher than its open, and it closed somewhere in the middle. Okay, but there was more rejection from the bottom side than there was to the top side. So in essence, this candle, although looks bearish, is somewhat bullish when you compare and contrast it to what happened in this candle compared to the previous. What does this mean for my next candle? It means I'm probably going to get either a small bearish candle or a stronger bullish candle. Now I got a stronger bullish candle. Okay, so as you're starting to see the power of the bar by bar and how you can really pick the turning points with a lot of precision here, and see, you know, the corrections. Now in this particular situation, what are we expecting here? We're expecting a correction not a new structural high. So now you start looking into an area where there's structure, okay, to start looking for that weakness and that rotation. So now we would expect another bull candle. Now we're starting to see some of that selling pressure come in, some of that weakness in the area of interest here, and now we start to see the what? Some of that weakness, some of that, but we're still what? Bullish, very weak on the bullish. Will we expect a strong candle here next coming in there? No. Can we rule out the fact that we're going to produce an invitation to sell here? No. Okay, boom. And here is your rotation and price, the invitation all rolled up in one. Okay, that was preceded by this area of interest, the selling pressure coming in. We knew that the next candle could produce that. Okay, and now that we got that, we expect price to go down from here. Okay, we expect definitely when we compare and contrast these two candles, what? For price to continue downward. Okay, we get indecision. Okay, weakness, buyers try to come in, not strong enough. Sellers try to sell off, not strong enough either, indecision. Okay, I expect a bearish candle next. Okay, I expect another bearish candle as we're still trying to deal with this area of support here. Don't know what happened back there, doesn't matter. Okay, we're starting to see some of that buying pressure still, but the fact that price never really made it all the way completely to structure tells us that the bears should have strength here to continue to take price lower. Okay, bearish candle, next candle, bearish candle, next candle, bearish candle, bearish candle, and we get a bullish candle. So now we have what? An area of interest, an area of possible rotation, well, definite rotation, and an interest area for what? Another correction. Okay, we get a candle here that barely tries to trade below its open. It's not able to hold on to price, completely engulfs, okay, the previous candle. Don't use the term engulfing from a candlestick formation. Okay, we look at strength and weakness. This candle held what? More than two-thirds of its overall volume. Still a little bit of selling pressure, but overall this candle clearly decided to sell over this one, and this is a very strong signal to go up. Nope. And here we would expect price to correct. Now in this particular situation, we had great projection, weaker projection. We expect a deeper correction. Should price come back to this level, at the very least, it may come back 100% to this area. The candles will help us identify that. Okay, our expectation, next candle, what? Bullish. Okay, and we don't get that. Okay, we get a candle that barely tries to trade above its open and gets what? It gets into a situation where now we have another decision and rotation to the downside. Okay, this candle closes almost at 100% below its near its low. It does not try to trade much higher than the previous candle, or this candle for that matter. So we see that the bulls were not really to capitalize on this volume, on this strength here, closing 100%, and is unable to do that. That's significant when you compare and contrast it. And now our expectation is for another turning for price to head downward. Okay, and that does not happen, and that's okay. It doesn't mean that you're wrong. Okay, remember, we're looking candle to candle on a 233 tick chart. The fact that we were able to identify 1, 2, and 3 turning points out of 4, okay, we're 75% right now. That's pretty powerful. Okay, what does this mean in the grand scheme of things? No, we have to revert back to what our initial expectation was of price coming back into this area, or 100% of these highs. Especially after this candle, what would we expect? A bullish candle. Okay, and we have some of that weakness that we would want to see in the area that we're interested in. 100% almost came here for sure. Now we start seeing some of the sellers trying to get back into this market. We see the weakness. We should not get much price not going very much further to the upside. Okay, so in this particular situation, we would expect a weak intra-body bull candle, because that would be the expectation. All we have here is bullish weakness. Okay, we have even more bullish weakness, but we have what? The sellers trying to get back into this market as they're able to trade below this candle, which was that this previous candle was not able to do. So now we have a very weak invitation to sell here, and we would expect that the next candle start being able to possibly hold on to some of that bearish tendency and close bearish. And here we have that. And now we have another turning point to the downside. So when you look at this in retrospect, were we wrong here? No, we were just off by a little bit. We had a understanding of where the market should go to. We understood the rotation. We understood that this was another desperate attempt to get higher. But in all retrospect, we weren't off by too much. But nonetheless, price did climb higher than our candle. So we'll count this as a one where we were slightly off. But you can see the power here. What is our expectation on the next candle? Down. And I'm sorry, I pressed the button too fast. So we see that there are some complex corrections going on here. We would expect price to continue going down, but right now we have this candle that was out of place, does not make sense, tried to trade very little below its open, closes very strong to the upside. Our expectation from all this is that we get a bullish candle coming up, and we do. And now price is at 100% of this area, which we kind of expected beforehand, but we had two rotation candles that failed. Okay, what does this mean? It's just nothing more than the price is going to climb higher for right now, and we expect another bull candle here. Okay, and now we expect another bull candle, and now we have another possible decision candle here. But we wouldn't expect price to come completely down yet, as we still have some buying pressure. The candle is not able to hold on to, well, it's able to hold on to about 50% of its overall selling strength. It wasn't able to trade higher than the previous one. This is a decent invitation here, consistent with an area that we would expect. Okay, so it will not be out of place to see here that the next candle have a more bearish tone to it, and our expectation pretty much officially would be somewhat of the same. Some kind of weak candle where there's bullish or bearish would not be out of place to see here. Okay, and we do see that we have a little bit of both. We said a weak candle here, bullish or bearish. I said that it would not be unreasonable to see the bears hold on to something here, and they did. And this is a stronger invitation, and now we're going to address this area from a perspective of correction here and see where price takes us here. We're going to move things a little quicker in the interest of time. Okay, and now we see that we expect price to climb here. We're just going to keep plugging away here. And once you get good at this and you go through this exercise, and notice how fast it becomes and how quick we can assess. Need more information. Okay. The information was made there. Missed this one. No signal, so can't count it right or wrong. We're only assessing what we can see here. This is a weak invitation to buy. Invitation to sell. Oof. This is going down. Ooh, I was wrong. Okay, so I don't mean to have so much dead spaces. You get the general idea. Let's look at the power here. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So we had 16 turning points that we identified. Okay, out of those 16, 1, 2, 3, 4, I guess 5. We missed this one. 6, 7, 8, 9, 10. We missed this one. 11. No signal here because price was going to go up. It just farted around. Oh, crap. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So 12 divided by 16. Okay, so with a 75% accuracy, I was able to tell you each swing's turning point. Okay, how powerful is that? Now we're looking in areas that were complex because price was pretty much range bound in this area, and show some complexity in here. But I was able to show you with a 75% accuracy how price was able to correct, whether up or down, just based on bar by bar analysis. So you're going to come to see that structure analysis is 75% accurate, or 70+% accurate. You're going to come to see that bar by bar is 75% accurate. You're going to come to see that order flow helps you refine that even more. So now we're putting all these elements together, that with a very high degree of probability put you on the right side of what's happening on the chart. Extremely powerful stuff. Okay, so I'm going to close this video here. I'm going to let you guys digest this information and move it forward and understand that nothing is 100%. But if you can understand where price is going to turn by bar by bar analysis and be 75% accurate, that holds tremendous value in timing your entries and processing the chart even more accurate than you already are. Okay, really polishes up that crystal ball even further. The next video is going to be tying all this together into with the structure analysis, the bar by bar, the supply and demand zones, everything. We're going to tie it together in a step-by-step process to understand and time our entries based on the bar by bar. Okay, so in the next video we're going to start discussing trade entries and expectations. Okay, and in the next video after that we're going to start talking about trade management. So I hope this video had power to you. This does take a little bit of practice, but once you start looking, I've already taught you to look at everything from a strength and weakness standpoint. The candles should be no different. Okay, and it doesn't matter whether it's a 233 tick candle. I was able to tell you with a 75% accuracy where these turning points are going to be in a time frame that most people consider to be full of noise and completely unpredictable. Okay, tremendous power and value. I hope you can see that, and we'll talk to you soon.